today, so I just gave out cards. Andrew, thank you again, supporting his training class, also Envision Title, and let me come in and kind of talk about what I do with Nexa Mortgage. So I'm a mortgage broker. Not sure if you guys have worked with a broker before. I think I've seen some familiar faces too, so that's good. But in general, as a broker, I have lenders underneath the broker license. There's 140 lenders that a broker has. And how is that better? You're not stuck to one lender guidelines. You're not stuck to the same interest rates from standard lenders. Yeah, I'm good, bro.
Shut the door real quick, guys, yeah.
Sure.
So we don't get them all.
Got it, yeah. So the business model basically gives you more competitive rates for your clients. You get more products for your clients. You still get the local presence you want from your loan officer in the same city you do business in. But now you have access to lenders all over the country that your clients had no idea that they could actually borrow from. These lenders don't have opportunities to go and promote themselves. They work just the back end part of the mortgage process, and they have brokers reach out to them with competitive pricing. So we shop the clients for you with all these lenders that come back with offers. We're shopping for them. Think about all that opportunity as opposed to just having to fit in a box. The lenders are trying to get their box with the client. So it's a great business model. I'm telling you guys, there's been so much better pricing opportunities with this model with clients I've worked with. Andrew's clients, his general realtor, just seeing that success model on interest rates, even more flexibility on product guidelines. San Antonio's niche really has been government lending, VA, FHA, first-time home buyers. So a lot of lenders that are trying to get into Texas are focusing on first-time home buyer programs, primary residences. They're looking at down payment assistance programs with FICO scores down to 580. They're even looking at higher purchase price with no money down as well with no income caps. They're just trying to stretch out the liquidity that clients need to focus on when they buy the home the first time and still keep rates competitive. So pretty interesting. Real life scenario, I had a client looking at $410,000, had a serious life event, didn't have a lot of liquid assets, solid income, wanted down payment assistance. I was gonna say, no, get out of here. We quoted him 4 different lenders with 4 different options. $410,000 home, $16,000 assistance. Don't fall into the gaps or into the boxes that you think are out there. Those are self-inflicted overlays from lenders. Take that box out and just look at what can we lend and how much is really the concern. Not if we can. We can't. How much? What product? That's what I do as a broker. What else? Well, me, Manny Yakian, the lead broker, Nexa Mortgage here. Got a couple guys that work together as a team. Been doing this for a long time. Got the white hairs to show it since 2008. Different hats over the years, guys. Managed the team, self-produced, did the builder thing. Broker model is the best way. Let me earn your trust, your business. I'm telling you guys, if you have clients that you have really just been wondering what is going on financing-wise, give me a shot. I promise you're gonna look at some better interest rates off the get-go. I mean, I can just tell you that with our model. Small class, don't have anything else I can say. I know you're doing this on a video, but if you guys have something else, give me a call, shoot me a text. Like I said, I went cash today, but either way, like you said, it's the information that's golden. But the follow-up, just let me know if you guys need something else. Thank you guys for the time. Small class today, but appreciate you. Good to go.
Appreciate you guys, thanks.
Yeah.
Do you guys have any questions for Manny before we hit the road?
Oh, that's true, yeah. Any specific? I'll be hanging around too, but honestly, guys,
He'll be here right after class too.
give yourself the opportunity to your clients. I don't know why people don't. I'm all about relationships too, but relationships have to be earned as well and maintained. Just being honest, guys. So, all right, guys,
Thank you, man.
you got it.
All right, guys, so
Thank
today
you.
we're gonna talk
I'll be
about
out here.
real estate
Thanks, man.
taxes made easy, okay? So, as we talk here, I'm not a CPA, just so you know, so if you have a hard question, I might not be able to answer it. I'm gonna go over the good, basic stuff. I shared some of the things I'll pull up from the Google Drive that I shared with you. So if you didn't bring your computer, and some of you guys didn't bring your computer, which is fine, you'll still have access to it when you get home on your computer, so you can still follow along. If you come to my classes in the future, most of my classes are semi-hands-on. So it's always a good idea to bring your computer when you come. Okay, so I do a lot of hands-on so people can get more out of it, right? So if you have any real specific questions, reach out to your CPA. My CPA helped me build this with another agent I have who's a certified CPA as well. So I've had some help, so it wasn't just me, so make it work, okay? This is what we're gonna go over, make it easy, vehicles deep dive, and some cash employees. So the first thing to do when you're thinking about doing your taxes as realtors, find ways to make it easy. We can't stress this enough, okay? We have to stress it like 10 times. So if you want, and what I mean by that is, don't try to keep every receipt in your back pocket, in your, I had a bucket at home my first year, where I had a big plastic tub, and I put every receipt in this plastic tub. No one told me, no one ever taught me, as a brand new agent 10 years ago. And then I had to manually put them into a free open software spreadsheet. It took me like a day just to enter all my receipts. It was horrible, like 10 hours of manual entry, and it was terrible. So don't be like me, learn. So another easy way, QuickBooks is really good. It takes a slight learning curve, but it's not terribly expensive. You can just take a picture of it, it automatically loads your receipt up, puts it in the right category, does everything for you, and all you have to do is have that app on your phone and have it connected. It also works for gas receipts. We'll talk about vehicles in a minute, vehicles and gas and things like that, things you can write off. So that's a really easy way. The reason we say to think about like a third-party site, if you get audited, they're not gonna say, Daniel, oh, you drove 30,000 miles last year. Okay, can you show me your odometer every day where you organize your odometer? And they're gonna be like, you're gonna be like, what the heck are you talking about? No, they're gonna say, okay, send us your mile IQ, send us your QuickBooks, please, where it shows your GPS coordinates of where you stopped and where you started. And if it's a third-party site, a third-party app, they're not gonna fight it. Or usually my CPA said they don't fight it nearly as much, because it's not you saying you did so much. Because anyone can say, I drove 20, 30,000 miles, but if you can't prove it, when you get audited, then that's gonna happen. And we all will get audited one time in our lives as agents, just so you know, because 1099 is crazy. So make sure you have a lead accountant, okay? Mile IQ is another one that I like, that I've heard that works really well. It's free, or very inexpensive, if not for free, pretty much. And you just put it in there when you start driving, you turn it on, it tracks your miles, and you turn it off when you get there. Very easy to do. I had one I used for a couple of years when I was doing it a different way. It was called Travelog, I think, if it's still out there. It would automatically turn on for me when I got past like 10 miles an hour or something. So if I was driving in my neighborhood like really slow, it wouldn't turn on. But the moment I hit a certain speed limit, it would automatically turn on for me. And then it would automatically turn off when I park, because I'm terrible of going to the app and turning it on and off. I forget every freaking time.
Mile IQ now turns on automatically when
Does
you're
it
in
too?
your vehicle.
See, my IQ does it too for you now.
Yeah.
See, that was the only one, that was years ago for us, I'm dating myself. But like 8 years ago, that's the only one I could find that did it automatic. Now my IQ does too, which is great. That's why I used that one before, because it was so easy. It just turned on automatically, never had to worry about anything. It did drain your battery some, like some of these apps do, so that's why you plug your phone. It's easy, okay? So just think about that. Try to find a way to automate it when you're doing your stuff. Vehicles are a huge write-off. This is probably one of the biggest write-offs we can do for real estate agents. So if you buy a new vehicle, or you see agents, and a lot of people joke and say, I'm not ready to be that agent that has the new Mercedes every 2 years. And it's not because those agents are balling or they're doing good. They could be sucky agents who are barely making it. They get a new Mercedes every 2 years because it's more than 6,000 pounds usually. And if your vehicle is more than 6,000 pounds, you can write 100% of that vehicle cost off. So if you buy a $70,000 car and you made $100,000 last year, you can write off $70,000 right there on your next year. And then 2 years later, you can turn that vehicle in and buy another $100,000 car, or $50,000, $60,000 car, and write the whole thing off again. So that's why you see these agents driving these really fancy cars, not because they are balling, it's because they have a huge tax write-off, and it saves them all that money to have that tax write-off. Now, if you want to have a nice car and you don't want to worry about that, you can also do a lease, and if you're using your car for business, you can write the lease off as a business payment every month. And a lot of agents do that as well, okay? And I always use Mercedes as a joke, but also you see a lot of agents will drive like Ford F-150s, because most Ford F-150s are just over 6,000 pounds, and they're not terribly expensive, okay? Compared to some of the other $90,000 to $100,000 cars that are out there, like the G-Wagon and stuff like that. So just think about that. When my car now is under that, I didn't know, because again, when I bought my car 3.5 years ago, nobody ever told me to look for 6,000 pounds or more. So I'm telling you guys, learn. I would have had a huge write-off, not a huge one, I got a good deal. It would have been a great write-off. Any write-off is good. I would have taken it, hell yeah, yep. So then from my next car in a couple of years, when my warranty's off in this one, I'm gonna be looking for a bigger one on purpose, just for that. You can write off miles. So miles, it's really good to keep track of them. As realtors, since we drive so much usually, this is probably my biggest write-off is my miles every year. Okay, because I go close to 30,000 miles, or just over 30 every year, with all my travel and my trainings everywhere, going to Houston, Dallas, everything. I drive a lot. So for that, I write a lot of miles, and I think it's 56, 58 cents, something like that. It's a lot.
Yeah.
So So it saves you a lot of money. So keep track, that's why we talked about this one, about finding a way to automate your miles, so that when you go here, you can keep track of it and it can save you tons of money, okay? Now, if you have a big truck, like I have a good friend, Patrick Stern, who does farm and ranch, I give him a free shout out on the video. He's awesome at that job, and he has a big truck that he drives around, and he probably spends $2,000 or $3,000 a month in gas for his diesel truck, because he drives 8 or 10 hours every other day all over Texas. But he writes that off, and that's part of his business, and he gets multi-million-dollar rentals by driving all over the place. But that's his business plan, and then he writes those off by having that write-off, and he makes more money writing off his gas, because he spends more on it than he would on his miles. So you have to balance, which one is the better write-off for you? Is it gas or miles, okay? And the other thing you can do is you can write off depreciation, okay? So what that would mean is you have to keep the vehicle for 5 years usually. I think it's 5 years, it was 4 or 5, I'm pretty sure it's 5. And then every year you can write off 1/5 of your vehicle value. If you trade your vehicle in before the 5 years or whatever the time is, you have to pay the IRS back. So a lot of people don't do depreciation because most realtors put so many miles on their vehicles. Like my car's hitting like 100,000, it's like it's in the high 80s, it'll be 100,000 in a couple months if I'm not careful. So I'm, even though I have 2 more things, I'm gonna try to keep pushing it to get to 200,000. Because you put so many miles. So even if I only own it for 2 or 3 years, I may be at 100,000 miles an hour, 120,000. So then you're gonna be looking at, turning it in to get something with lower miles, so it runs better. So depreciation, you can do it, but just keep in mind if you do it, if you turn it in before the time that your CPA tells you to keep it, you gotta pay it back.
So it's kind of 5-year period.
It's 5 years, so if you're, like, I'm gonna try to keep, I'm on 3.5 on my car now, so I'm gonna try to keep it for 5, cause I have a 5-year bumper warranty, I paid extra when I bought it, just because I know I drive the heck out of my cars. And I want the engine to blow out so I get a free engine. I'm like, I'm gonna drive this sucker everywhere, cause I want it to go, I want it to have issues. And it's a really good car, it hasn't had any issues, which is good but bad at the same time. Cause I want it to have issues so I can change it out, cause I have the warranty, it doesn't cost me anything. Yep, but at the same time, of course, I don't. So that's kind of funny, but so I'm looking more at depreciation. I talked to my accountant this year about it, because I'm not planning to turn it in.
Okay.
I'm keeping it for as long as I can, I'm just gonna keep rolling with it.
So if we are planning to like change the car in next 2 to 3 years,
Then
it
you
is
don't want to
better
do that.
don't do.
Yeah, and then look, if you wanna write the whole price off, look for 6,000 or more, they say more than 6,000.
More than 6,000.
Yeah, so, but most cars aren't gonna be exactly 6,000, it'll be 6,001 or something,
Yeah.
or higher, so any vehicle higher, any trucks are usually higher, except for the little trucks they build now, like the Rangers or something. Okay, if you have cash employees, I know some people do investments, stuff like that, if you pay someone cash for anything, even if someone is like helping you just hang door hangers, anything like that, and you wanna pay cash, what you can do is you can write that off on your taxes as well as money you paid out. So to do that, a lot of these cash employees say, I don't have an ID, I don't have anything, just take a picture of them, and then have a receipt, and then have them sign it that you paid them cash. Make sure you have some kind of receipt. If they refuse to sign the receipt, just put an X and say refuse to sign and put the date. Just some way, and then if you take a picture of them, print off that picture, and then add it to the receipt, so when you turn it into your IRS, remember, your job is to just say, this is what I paid out cash. Your job is not to claim it, they have to go after those people themselves and try to claim it that way, okay? But if you have if you do a lot of wholesaling, a lot of investing, and a lot of people, like I work with a couple investors, they write off a lot, they pay cash. A lot of employees want to be paid cash, because they don't have to claim it, so they wanna get rid of chaos, so that way they can write everything off. You still write it off for the cash you paid, but at the same time, it doesn't come against you. They have to report it to the IRS, it's not up to you to do that, okay? So just make sure you keep that documentation with you when you do that. Then I'm gonna go over now into the actual tax sheet breakdown. So this is an example sheet that I like to show. This is what I actually send to my CPA every year, he loves it, because everything is broken down, and we're gonna go through it a little bit and talk about a lot of these things. So if you pay alimony, you can write your alimony off, and you have a copy of this too, so. I gave, a copy of this is in your Google Drive,
Oh, okay.
so you can take pictures if you want, but you already have it, yeah.
Yeah, okay, thank you.
Yeah, and you can have whatever you want to do with it, yeah.
I have no idea how to get, I mean.
Okay, I'll show you.
So are we
How
able
to get to
to,
mind to Google.
we are able to access these documents
Yep.
through Google
Now, when
Drive?
you open it, you have to go here to file, make a copy, and make a copy. You can't write on it.
Oh, okay.
You have to make a copy for yourself.
Okay.
So if you're in Chrome, to get the Google Drive, you open a new tab in Chrome, and and then you click on these 9 dots, and right here it's a weird
Yes.
looking triangle. Your triangle will be right
okay.
here, cause
Yes.
I moved mine up, I drag mine up here, cause I use it all the time.
Okay,
And that's how you find Google Drive. And then once you're in Google Drive, you're gonna go to the left and click Shared with Me. And then you'll see where it says real estate taxes or taxes done right.
Okay.
That's how you'll find it. And anyone who's watching the video will put the link for the Google Drive in the video.
and you've used the, sorry,
You're good,
you've
yeah.
used the email that I signed up with?
Yep.
Okay,
And it'll probably say that Andrew Moran or Realtor Andrew Moran, I shared this with you. And then you just click open and it will open it up right away.
okay.
And you only have to do that once.
Sure.
Okay, so if you pay alimony, like I'm just finishing mine, when you go through that, when you do that, you can write that off. That's a writable offense there, you can write off. If you pay the interest on your home, if you own a home, you of course can write your interest off. If you pay the interest on your school loans, a lot of people, I still have school loans, it's been a long time since I graduated, trying to pay these suckers off, yep. So I still pay monthly payments, I can write my interest off. If you have a disability, like I have a VA disability, I get payments from the VA for that, I don't get taxed on that, but I have to tell them how much it is. So because of that, it can put you into a different tax bracket. That's why they have to do it, cause if you say like, if you're 100% in San Antonio, I wish I was, if you're 100%, you make $3,500 a month. So you're already making, 40,000 a year before you do any other, other type of work. Or 35,000, whatever it is. So that way, if you're already making that and then you make 60,000, you're not being taxed on 60, you're being taxed as if you made 100,000. Cause that's your new tax bracket you got pushed up into. Okay, so that's why you have to reach, so when you talk to people, they have to report that. It's non-taxable, you can't be taxed on it, but it can put you in a different bracket.
If you don't tell them.
If they don't tell them, then that's up to you.
Well, no, what I'm saying is if they're 100% disabled, they get 3,500, then they make that 60. If they don't tell the IRS, hey, actually, I'm getting this 3,500.
Well, the government
Does that-
reports that.
Right, but
Yeah.
is that what puts you in a different tax bracket?
Yeah, cause they add that 40 whatever to that 60 you made.
So
But if you,
you're
but a lot of,
getting taxed on it in a sense.
you are, but you're not. Cause it just puts you, I know it's silly, they tried to explain it to me, I kinda understand it, but not really. I know it's really silly, cause my tax guy was like, you gotta tell me, I'm like, I don't get taxed on it, and he's like, but you have, you make a little bit, it might put you over, and I was like, crap. Cause I do pretty well, and then I do that little bit more that I make always kicks me into that next bracket. And then you get taxed, then I start my write-offs and try not to get taxed on that.
Okay.
But a lot of veterans who are
Oh,
100%, they don't work because they can't, because they have medical issues, then they have no taxable income. They still report it, but they report it as non-taxable, so they track it, so you still have to report it, so just remember that if you know anyone in the VA.
So it's kind of you report it and then you deduct it, so.
Yep,
Okay.
it's silly the way,
It's-
anyway, because I know
It
it's
is.
complicated, but that's why I'm just telling you what you gotta do.
A little bit like social security maybe?
Exactly, just like social security, where it's non-taxable, but you still have to tell them. Yep, it's crazy that way, yep. If you pay electrical, water, gas, all that for your home, you can write off a certain percentage of that on your tax bill, depending on how many square feet your office, we'll talk about that in a second, okay? And we'll get into that. Your cell phone bill, if you're, like I'm the main cell phone user, or whatever, in my cell phone bill, I can write that off. Of course, my wife, who helps me in real estate, can write hers off, but my other two stepsons that I help cover for theirs, they don't do real estate, so I can't write theirs off. I have to only write off the people who do real estate and use it for work, cause your cell phone, of course, is your main thing you use in real estate. You can write off some of your internet, you can do that, part of your bill, cause you use that obviously at home. Now, who here has a home office? Everybody say yes, you all have a home office, okay?
Yes.
It doesn't matter if you think you don't, okay, cause you do work from home no matter what you're doing, right? So when you do your home office, you can write off, if you don't have like a separate office, you can write off an area that you work, okay? And I did talk to some accountants who had questions the last time I did this class. You can also write off, like I have a little kick out of my garage, like a little half-car garage you can park, and I store my real estate stuff there. So because it's used for business, I can write off that square feet. So if you park your vehicle for business in your garage, you can write off the square feet of your garage. And you can also, because you have to use the restroom when you're working, you can write off one of your bathrooms in your home as a business restroom. Okay, so you can add more square feet, I think it's 30% square feet of your home total. So if you have 1,000 square foot home, you can't write off 500 square feet, that makes no sense.
Yeah.
But if you have, most homes are around 2,000, 2,500, and And if you write off 400 or 500 square feet, that'd be normal, or more like that, okay? The bigger the home, the more you could write off.
And how about if a spouse also into business, like both are realtors?
If you're both realtors, then you get right more off, yep. You have to talk to the CPA to get the numbers exactly, yep. And then, of course, your office, if your insurance that you pay for your home insurance, you can write that off and send it to them. We talked about miles already, of course. Car insurance, you're paying your car insurance fees, but what you're paying for your car insurance, because that's a vehicle for work. Marketing is great, so I wanted to talk just a second about marketing. Write off all of your stinking marketing. Do everything for marketing and write it off. So if you have a client, that if you do a listing agent and they say, hey, I want to pay 5% instead of 4%, right? What if you want to give up 1%? What do you do with that 1%? You write it off as marketing. And you tell your client, remember, it's not just, I'm just gonna write it off, that's silly. You tell them, hey, I will give you a discount as long as you know that I'm writing this off as marketing on my taxes. And then they say, yes, I agree to this is part of your marketing budget. And then they have to market you, of course, tell their friends and neighbors. But that way, I always try to give something back for every closing I get, so that I can write something off as marketing, because I pay a lot of taxes. So I try to make sure I don't have to pay so many taxes. I wanna write off as much as I can write off, okay? So always try to give something back. We do that, okay? All your realtor fees, we have to pay, all those ridiculous fees, you can write all those off every year. Buy yourself a computer and your cell phone every year, you can write those off, okay? I try to get, I've been having a computer for like 3 years now, 4 years, I like it, so I don't wanna change it because it works good, but I just update, I just change the memory, change the fan. Luckily my stepson's a computer guy, he can take it apart and rebuild it. So when it slows down, he just rebuilds the parts that are breaking. So I've only spent a couple $100 instead of a couple thousand. So I should've just bought a new computer and brought more off, but it's okay. It's alright, but I did get a new cell phone, so I'm good. Yep. All your signs and equipment, your open house signs, your flags, everything you use for real estate, write that off, okay? So miscellaneous costs for anything else you can think of for real estate. Sometimes you have to go buy silly things, closing gifts, all these little things like that, miscellaneous stuff that you never think about. Paper, pens, ink, all the little stuff that you need to use for your business that you don't even think about. That's a miscellaneous cost, so you can write all those off. You now can write off 100% of your meals as long as it's work related. Okay, it used to be 50%, you could only write off so much. Now with COVID, a lot of that has changed this last year. I don't know if it'll change next year, you never know what's going on, but as of right now, you can write off 100%. So if you're somewhere with anybody who does real estate, and you talk about real estate, that's now a business reel. Okay, it's not just you and your spouse saying, hey, do you know a realtor? That doesn't, of course, they already know your realtor. But if you talk to someone around you, talk to your server, give them your card. If you go on a trip, we're gonna talk about trips in a minute, work trips is the next one. Always talk to somebody in the hotel, like the concierge. Say, if you know anyone in the area that's looking for a home, here's my business card, and then leave that behind on all the trips. You go on any trips from here. And then all those trips are now written off as work. And now you can write them off. Okay? So as realtors, enjoy your time. We have a very stressful job. On Saturday, my wife and I like to go out and try to visit a little town within a mile or so of San Antonio. We visited all the little towns. It's our day to get out together and just spend time together and not do anything else. If we can do it, yeah. Real estate, we can't always do it, but we try. We do pretty good. We only miss like once every couple months, but we do it. But then we always meet someone there and talk about real estate. And I've gotten referrals and all that from doing that. So now my wife's better at it than I am now. And now whenever we go anywhere, she's just like, oh, and he's a realtor if you need any help. Because she knows we write this sucker off. And I'm like, that's right, baby, let's do it. So you can do that, okay? You can pay intern or family so much per month. Okay, I think if it's under 12,000, if I remember correctly, something like that.
12,950.
So there it is, you know exactly. So 12,950, I know it's right around 12,000. So if you pay less than that, you don't have, it's tax deductible and they don't have to file an IRS claim if they make less than that amount. So I pay my wife, she answers my phone when I drive because I'm driving, things like that. So I pay her as my employee $1,000 a month. And then she makes $12,000 a month that I write off for my taxes as my employee. And then she doesn't have to claim that because it's under 12,000, even though we follow jointly, so it doesn't matter. It's still, and then if I have any kids, anything else, I can pay them as an employee as well, and then they can be taking that. So it's a way to start saving that. All right, if you have a TC, transaction coordinator, that's gonna keep track of all your stuff, I highly recommend getting one when you start doing a couple deals. They charge $300 to $500 usually. You know, that's a write-off right there, easy, boom. You use them, keep you busy, you don't have to worry about it. If you pay healthcare fees, you can write those off. Some vehicle maintenance can be written off. has to be a certain, I know there's a weird formula they told me, I don't know what it is, but it's a certain amount, if you have like a really bad, and you have to put thousands of dollars into your vehicle because the insurance didn't cover it or whatever, then you can write a lot of that off. If you just put the regular amounts in there, and it's just the regular like oil changes and stuff, that of course isn't enough based on the value of your vehicle, there's a big formula they use. So just let them know how much you spent, or your accountants, and then they will take a chance and let you know what you can write off or not, cause they say, my accountant always says, tell me how much it is, but it might not mean anything. And I'm like, okay, whatever, and I just give it to them, okay? And then personal care. Now, another thing we didn't put in here, now personal care, I include clothes. So if you're buying clothes and they're gonna be used for business, like you're gonna buy nice clothes to go out, you can write off 100%. It used to be that we had to have the logo on them, like EXP or whatever broker you're from, JPAR, or whatever, Remax, whatever, you had to have the logo in there. It's no longer that way. I checked with my accountant last class. They said now if you buy clothes and they're for work, 100% you can write off. Okay, so it's an easy way to write off. So this gives you a really easy breakdown to kind of think about everything you could write off. And then I like to just make it simple, and I put my dependent's name, social, date of birth, put my spouse on my accountant. I just send him this form. I go, boop, here you go. And I don't have to, he loves it. And then I answer his questions like, you buy or sold a home, you buy or sell a car, any solar panel, anything that would give me tax credits. I answer those questions in the email form, and that's it. I've never met my accountant in like the last 4 years, I don't think. But I just send it to them. When COVID happened, they have an online portal. It's secure, you have to get a new password every time. I click in, make my new password, log in, upload my docs, I email the accountant, here you go, and then he's done. 2 weeks later, he emails me, okay, log in, sign, pay it, you're good, okay, good, boop, done. I just roll it, I don't have to worry about it, okay? And they love it because it doesn't have to worry, easy, simple to put together. And the other thing in the Google Drive that I put in there for you, this is the actual, not this one. This one here is the actual breakdown when I told my accountant that I was a 1099 for realtors. So this is the actual breakdown he gave me, so you can use, and it tells you what other non-deductible expenses are in there. And like, see, it says that aren't branded, that's changed a little bit now. So this is the older tax code I haven't gotten in a couple of years. But these are things, you can use for your business. And all this stuff, so that's in there as well, so you can read through it.
It could be a parking fees,
You can write off
Right
parking
now.
fees. Yep. You can definitely write those off.
cause like my covered parking where I live, cause I work there, paid that.
Yep, or you can write that off as well, if you pay for a garage. And this is something I found on Facebook that somebody put up there that I thought was interesting. It also breaks down some other things you can do, like car wash, or car rental, repair, home insurance, copies, all the things that you might not, if you come training, or you train somebody, like I offer trainings and everything, and I'm a mentor, and I can set up KB4, people pay me to do that, you can write all that off. So like, Jason joined my team, and we worked out, he's gonna pay me so much for training, what he pays me, he gets to write off in the taxes, because that's a training fee. So you don't have to worry, so that's something, I don't know if you knew that or not, but you do know. Yep, so anything you train and you pay, you write that off in your taxes, okay? And then you can do that and then go through that way. I don't think anything else, that's the main thing. Do you guys have any questions? I know it's a lot of stuff.
I know. I did on the insurance
Yep.
for family, how do you keep track of that, and does it make a difference if, like, say, my husband and I have a
Yep.
property investment company, and so we use that basically
Yep.
for
Everything.
most of our, for everything. Except there are some things that are better on your personal than on, and with doing the real estate now for me, I'm finding that out.
Yep.
So, how do you, could I do that still with
Yeah,
my
'cause it's a
husband, or
business
with
trip.
cause he's really the mental guru that.
Yeah. No, my wife, like I said, my wife is really good. She
Yeah.
always now like, hey, do you need a house so you can help? And I was like, yeah, that's right, get in my car, Everywhere we go, she tells everybody, oh, he's a realtor, just so you know. And I'm like,
Yeah.
I don't have to do it anymore. I'm like, great. Because,
Well, it's a team
it's
thing,
a
right?
team thing, exactly. And also, then I know I can write it off.
Okay,
I don't have to worry about it.
so being able to pay him, like, maybe just show $11,000 a year,
So talk with the accountant and make sure.
talk with the accountant,
And make sure
because
with the- it
he's
should-
really good,
But I pay my wife, that's what I do, and he said it's fine, because
Okay.
she's my assistant, and I pay her $1,000 a
And-
month, so it's $12,000 a year.
That's under your personal taxes, correct? I
No,
mean,
well,
under your name, your joint.
Yeah, I don't have an LLC or anything,
Mhm.
because after all my write-offs, I'm under 100,000. So, my accountant says if, after my write-offs, if I was still over 100,000, then he said it's worth looking at doing an LLC and an S corp and stuff like that to reduce your tax liability. He said, because, he said, you have enough write-offs that kicked you, we got you under 100, so because of that, he said, you don't need an LLC to pay yourself. Cause it's
Okay.
not gonna, it's gonna charge so much more to pay the accountant, because then you have to pull up the payroll taxes, it gets more complicated for the accountant.
Okay,
And he said, yeah, instead of doing one form with, the 1040 EZ with the extra Schedule E, where they do the deductions, instead of just doing that form and the regular, you're good, boom, knock it out. Now we have to do a form for each person in your business that you're paying, and the Schedule E, and the taxes, and the LLC, which is good. So if you're making a lot of money, then you can. I mean, I could have had an LLC and had a holding company who ran my LLC, and I could have paid, whatever I didn't write off to my holding company, and it would have had zero income.
yeah,
And that's the thing you can do too, but then it would have cost me, I might have saved a little bit, but it would have cost me a
Right,
lot more
yes.
in the accountant. And that's what he said, it's probably not worth it. He said, if you don't have it, if you make more and don't write off as much, cause I write off a lot, everything I can think of,
right.
So,
and I have a good accountant.
though we have LLC, can we do just our personal taxes, those LLC
I would
income
talk to
also?
your accountant, make sure, and
Okay.
see, cause I know you can have an LLC, and that could be, remember, an LLC has to be managed by something.
Yes,
So you
somebody
can have a
else.
holding company that runs your LLC, okay?
I do my own,
Yep.
so,
So I would talk, it gets kinda complicated, so you wanna talk to your accountant then. I don't wanna give any tax advice to a non-accountant.
okay, no, it's.
But that's just a way that you
but-
can do that, and then you
Okay.
can pay your holding companies different things, and and that way you have a less tax burden. But I would definitely talk to tax professionals who understand it better,
Gotcha,
cause I talk to mine.
but it gives
yeah.
you things to ask them.
It gives you options.
Yeah, it gives you more to
Yep.
ask, yeah.
Yeah, cause me and Manny are gonna sit down, can you hit stop, I hope you guys like the class, so you can stop it now. Thanks.
Sorry.
You're good, no? You see it?